Hi, friends. Welcome again to another episode of Beyond the Clouds Edge to Edge Transformation. And along the way, sometimes we wonder, how come I didn't meet this person earlier? Giovanni is one of them. Amazing guy. He does all these analytics for companies of different kinds. Giovanni, tell us about you. How did you become this person I know today?
Hi, everyone, and thank you for joining this interesting discussion. And hi, Shankar, and thank you for inviting me. So my name is Giovanni Amodeo, and I'm a member of the executive team of Ion Analytics, which is a provider of data, news, and analytics to the financial community. So the market participants like investors, banks, corporate, lawyers, consultants, all use our services to be able to take better decisions in capital markets. So for example, you could be a banker trying to advise a corporate an M&A deal, or to issue a bond, or to IPO, or you are an investor and you're looking to find an acquisition target or an acquisition for your portfolio company, or you are a lawyer also looking at precedents in issuing or issuances or IPO. So these are different use cases, but there are many others. And as I said, I've been working for the company for over 20 years. I started with the career is interesting because I started as data analyst. So the person that was entering the details by looking at the financial statements. So this job now has been automated for the most part. And the human is the person that verifies what the machine has produced. Then after a year, my passion was always to be a journalist. And I never thought I could become a journalist. And just to share something interesting, I became a journalist in English, but in Italian at school, I had to produce essays, and I was really bad. I was marked really bad. And no one thought I could become a journalist because I didn't know how to write. And that gave me the motivation to say, okay, let me prove people wrong. So I was a journalist for many years. Then I became editor of one of the publications. Then I became the editor of the main publication, first in Europe and then globally. And then in 2015, or since 2013, 14, I started looking at data and why data is so relevant when you produce articles. So now, if you read any article in any newspaper or any organization, they have data embedded. But many years ago, they didn't. So I thought, how can we predict the future by using the data and interpreting the data? So while I was editing the main publication or the main company, which is Merger Market, then I started producing all these editorial analytics. Then fast forward a few years later, I managed all data function within the company. And then since last year, since I have a big connectivity with the market, I started a new project which is aimed at engaging with influencers in the capital market. So as you all know, people want to be led. So they want to find someone to follow. And my job is to identify those influencers, engage with them so that they can endorse our data and our capability.
Wow, that's an amazing list of things you've done. At this time, which are the most attractive markets to you and to your clients?
As you know, there is a lot of dry powder out there. So you have the LPs trying to allocate money and trying to make sense of the areas where they should be allocating money. And then you have those who invest money, so the GPs, and you have within that different asset classes. You have private equity, you have venture capital, and then there is an emergence of private credit. So this is an area definitely that we are interested in as a company. Private equity is definitely an area where traditionally we are interested. And if you think about it, when I started my career in 2000, there were probably around 3,000 private equity firms. Right now, it's very difficult to get exact figures, but we're talking about 16,000 to 20,000 private equity firms or financial investors. So you can see it's 4x in the last 20 years, and there is more wealth being created. So also add to that every time an entrepreneur sells his business, then they receive money. So they have a liquidity event. And it is more and more frequent that they create their family office or they join a multifamily office. So in other words, you need to look at, on one side, those who allocate the money and those who then manage the money and try to invest the money. And the same is with the corporate. Everyone else in the ecosystem, bankers, lawyers, consultants, then are there to support these two main actors. So one side, the allocators, the LPs, and on the other side, the corporate. And if you want to be a little more specific, one of the trends that we've seen over the last few months and speaking to the market is, let's look at Asia. And since you're Indian, India is one of the places in Asia and in the world where LPs are looking at right now. Because as you know, China, it's very difficult to allocate money there, and there is a little bit of political tension. So a lot of the investors are now turning and looking at India as well.
Very interesting indeed. Are there any vertical industries and markets that you think are most attractive or out of favor at this time?
Well, I talked about the asset classes earlier, so private credit, infra always will be one of the leading ones for the future, especially in these economic cycles with the interest rate where they are. Has to be seen what's happening with private equity and venture capital in 2024, but then definitely they are going to be successful in 2025 and beyond. In terms of sectors, everyone we speak to, they mention healthcare as one of the areas where with generative AI coming, they will be very, very successful. Technology, of course. And then the question is, on the other industries, which ones are the ones or the industry that are going to be able to adapt themselves very quickly to generative AI? And the other question is, are there enough talent out there that can help this transition? And which is the industry that is less resistant to change? So we work in the financial industry. So we serve clients, as I said, investors, banker, and so on. And to my conversation, the way what I understand is that there is a little bit of resistance to change because people think, okay, my job cannot be done by a machine. Maybe the job of an analyst can be done by a machine, but the job of a senior will not be done by a machine. Now the question is, are we going to be in a world where you're only going to have the super senior people and the junior, and then the rest is done by the machine? But then what's going to happen to the rest of the people? So these are the questions that we're trying to make sense of.
Well, thank you for giving us the full landscape. You mentioned something interesting that there has been a 4x growth in private equity. Have the returns kept up with it? And what's propelling this kind of growth? And do you think it'll continue?
Well, the returns have been quite successful. And if you look at the IRR or what the managers talk about is IRR of 20% or to 30%. And this is what the LPs are looking for. However, if you look at the last 12, 13 years after the financial crisis, we've been in an environment with low interest rate, with low inflation. So private equity firms had a good run. Now, two issues. One, with this interest rate level, so a lot of the operators don't have the experience to operate in the market. So they don't know how to deal with that. And the same in the portfolio companies. So that's one issue. And the second is much more difficult to see the returns that they were seeing before in the same period of time. So private equity firms need to learn that they might have to keep the portfolio companies for longer in their portfolio. They need to think about different structures. So continuation funds, for example. So yes, the return will still be attractive, but maybe the time frame will not be as short as before.
You know, during the pandemic, there were major supply chain issues, and we thought everything was over, and then the geopolitical tensions have begun, trade wars. How has it affected capital markets and the deployment of capital?
So we've seen a lot of companies trying to onshore and reshore the supply chain. So that's one factor. Second factor is there is a lot of pressure from an environmental point of view. So with impact investing becoming more and more important, companies need to be certified and they need to make sure that all the suppliers from the one who has the most proximity to the last one, they comply with impact and ESG rules. So again, there is a lot of work being done there. So, and then if you also add what happened between China, Taiwan, and the US, you see a picture which is a little bit more complex than before. Having said that, this will give discipline to companies to choose the best suppliers in the location that is maybe more proximate to them and that is more efficient to them. So yes, maybe in the short term, there have been a lot of issues, but then in the long term, this would be positive. Also, one of the things that I learned as a journalist, you see a lot of noise in the market. So think about when people were saying, well, now there's going to be so much more scrutiny for deals. That's true. But then if you look at the numbers, how many deals get scrutinized every year? And the ones that get scrutinized are the ones that make the headline. Maybe because they are in an industry that's strategic to the country, for example. or maybe because it's a big transaction. But realistically, people that work a regulator are not thousands. The number of people are finite. So the number of cases they can work on is limited. So the same on the supply chain. So yes, the large transaction might be in danger, but then all the rest of the deals will get done eventually.
You've been in data, using meaningful data for the financial sector. As you know, curating the data is a very manual and laborious process. How optimistic are you that with the machine learning, AI, and Gen AI tools that will get much better data? And what are the challenges in doing so?
It's a very good question. So the challenge is to get the data and verify whether it's accurate. So if you don't verify it and you don't have a way to verify that it's accurate, then it's very difficult to get it at scale. Also because with data, trust is the biggest characteristic. So if you deal with someone and the client doesn't trust you and your data, then you're screwed, right? So you don't know, you lost your game, and it's very difficult to change that perception. So that's the biggest challenge. And then, at least in our world, the most important thing is the more access you have to the customer, the more proprietary data you have. But again, having access to the client is not easy because it requires effort. It requires discussion with the client, team members that are able to discuss with the client and get proprietary data. So that, to me, is the key. Eventually, the machine will be able to ingest all the data, simplify all the processes. One, are you able to verify that they are accurate? And two, how much of that data is proprietary versus commoditized? And if everyone offers commoditized data, then how do you differentiate yourself from someone else? Again, it's about creating or identifying the niche.
So it looks like we cannot run away from people. We really have to continue cultivating strong relationships.
Yeah.
Yes.
And it's interesting because I was having a discussion on the plane with the head of for EMEA for a large investment banking. I asked him, okay, you're a managing director, you're the big boss of Europe. How is your job now? How much is networking out of 100%? So how much does it make for your job? And he said 40%. Okay, interesting. And what about an MD or your equivalent head of Europe 20 years ago? And he said 80% was networking. And I said, okay, what's the difference between now and then? And he said the knowledge and the experience of having done deals. And he said, if I deal with a large client, he wants to have the reassurance that I've done, let's say, 10, 15 hostile offers or 20 buyback, very complex. So the experience is more and more important. And then I said, okay, what about in 20 years' time? How is going to be your equivalent in 20 years' time? And he said, networking will probably be 10% and it might be a given, but the experience will take more and more importance. So back to the point I was making, are we going to be in a situation where we're going to have a lot of senior people and a lot of junior enthusiastic, and then what's going to happen in the middle? I haven't figured that out, but this is one of the big questions that we've been trying to answer every day.
Yeah, all kinds of interesting career transitions with all this so-called automation coming with, as you said, availability of information, the challenges in curating information. What will happen to people's careers?
Okay, let's stay in capital market. So if you are an analyst, yes, you will have to do the presentations that analysts were doing 10, 15, 20 years ago. You will have more tools to do this presentation. So there might be, and I'm thinking loud here, you might be asked to more presentations. Let's say, for example, you're working on one or two transactions at a time. If AI and automation will help you, you will have time to do more potentially. But then you have the senior who have the contacts with the client. And in the old days, the senior would help the junior get the exposure to the clients. So now the question is, if you are a junior who doesn't have the personal skills, you might not be able to see a client for a long time. So maybe your job might be out of date. So I can see those who are mediocre not being able to survive in capital markets, maybe not in 5 years' time, maybe in 10 years' time. And again, depends on the resistance of the people working in this ecosystem. So you will have more and more people who are trying to use their brain to derive insights and validate them with the machine, and more people will struggle to get to that level. So maybe there might be less jobs in capital markets.
Wow, it's such a complex thing even to predict, right? At least a part of your job is making predictions of the future. And with all these variables, not just technology variables, financial markets, interest rates, and all that, it's not possible to be 100% accurate all the time. I know most of you are, but still there's variation, right? What do you do at such times? What if your prediction is not right on the money?
No, absolutely. So we launched two main products, which are Merger Market and Deadwire, two new capabilities, which are called likely to exit and likely to issue. So likely to exit identifies those portfolio companies who are likely to exit based on certain scores in the next future. And the same is likely to issue. So these are the companies that are likely to issue a bond over the next few months and based on certain parameters that we indicate. Now, the score is weighted based on the parameters, and we make assumption and we make sure that people understand that this is a prediction. The most important thing is that you give an input to a client and you say, we think that these two or three companies are the most likely to exit from the portfolio of this private equity firm. It doesn't mean it's right, but it triggers a discussion. So for example, you are a banker or you are another private equity firm, and then you haven't thought about that, and you say, actually, hang on a minute, maybe it's not 100% probability, maybe it's 60%, but that will give the trigger for someone to think. Think about what you do and what everyone in this call or listening does. You go in and you ask someone something, but the goal is not to get an answer necessarily. The goal is to get an answer and another question, because questions make you think. So in the future, with more co-pilots, you will get some answers all the time, but also you want more questions. And then the more questions you get, the more answer you get, and the more you're going to be thinking. And that's the role of the human in the future, in capital markets and outside capital markets.
Well, that's so amazing. And it reminds me of weather predictions. Just because Google says no rain doesn't mean you don't take an umbrella, but it makes sense that you can adjust what you wear. You said you're creating an ecosystem of influencers with all this data that's available, even curating data. What's the role of influencers and what kind of influencers and why do you talk to them? Why do you create this ecosystem?
The goal of the influencer is to have them endorse our data and our capability. So as I said at the beginning, people want to be led and influenced by someone. Everyone has got, even if they deny it, everyone has got a role model. That could be their parent, but it also could be someone at work, an artist, an actor, anyone. So you need to, first of all, identify who this person is. So now let's look at capital markets. There might be people who are influential and they change the way people think in the market. So let's try to be a little bit current. There was an interview of the CEO of ExxonMobil 10 days ago at COP28, who was saying there's been too much discussion about renewable energy and less about other technologies like hydrogen. So people may agree or disagree with his view, but it's a very strong statement. And then if you are a participant in the capital market, you need to take into consideration. If you are a smaller company or a company that operates in an adjacent sector, you need to take into consideration of that because it's such an important figure. And if he says that, yeah, maybe you can dismiss it, but you're definitely not going to ignore it. So that's the whole purpose. So imagine linking yourself to influencers and have them endorse your data. So if that influencers endorse your data, then you become a credible person or a credible organization. So that's the goal of the influencer. So I'm going after those who are looking to or willing to shape the industry, either because they've done an interesting transaction or because they're already a big voice in the industry, or because they are an up-and-coming influencer and they have done some deals or some work that people can emulate.
Well, thank you. As you know, the number of first time entrepreneurs is growing and will continue to grow as new technologies come in and new markets and so on. A lot of passionate entrepreneurs who are technologists, like me when I was a geek, we don't always understand financial markets. We don't even understand marketing and being an influencer, but definitely understanding financial markets and the nuances of it is not their forte. How much should entrepreneurs pay attention to these things and what are the ways in which they can pay attention so that they don't get stuck when the weather changes?
I would say the most important thing is to create a team that where everyone has got different skills that complement each other. So if you are a founder with technical background and you are a head of product, you need to surround yourself with someone with finance background and someone with commercial background and marketing background. And then at that stage, you need to understand and learn from them. So it might not be a required skills from the very beginning, but it's a skill that needs to be learned as soon as possible. The most important thing is to learn about a client. And I was talking to one venture capitalist in Europe, and I was asking him, okay, how do you understand whether there is a demand for a product? And then he said, let me give you this example. Smoking. You know that smoking is bad. So there is a problem. Is that enough to launch a product? Maybe not. How do you know when there is a demand? So then you have something that can help you stop smoking because you have the willingness to stop smoking. Until you have the willingness to stop smoking, there is no demand. So this is the most important thing that founders need to take into consideration. Yes, you have a problem to solve, but is there a demand? And will people pay for that particular product? So once you understand that, you understand the customer. And then you need to start getting data on the customers. How often do they use the product? Is that a repeated action? Yes or no? And how frequently do they use it? And then once you do that, then you start associating financials to that. And then more and more, even though you don't have financial background, you can see that you're going to gain financial knowledge. And then marketing. Think about positioning your product. And positioning doesn't mean you position the product, but you position the product in the head of the customer. So what is the best way to do that? And who can help you do that? So these are all the things that a founder needs to take into consideration.
Well, thanks a lot, Giovanni. It's so exciting talking to you. We need to get you involved in some of the incubators. We need people who understand and can help our entrepreneurs, including people like me when we were first-time entrepreneurs, understand the need for finance, the need for understanding, the need for teams. It was very naive first time around when I said, oh, my product is so good, the whole world will buy it. No, they were like, who are you? So, and this is the reason, my friends, I talk to people from various industries, from various sectors, from various parts of the world. It's a delight talking to you. And to people out there, please come forward, tell us your stories, whether it's in marketing or in finance or in technology or in education. And there are so many more things because that's the only way we can co-create a responsible future. No one has the formula to create a perfect future. We need support, we need ethics. So please come forward. And Giovanni, it's a joy. We'll have to keep talking periodically so that I understand more about what you folks do and how you influence the whole world.
Thank you, Shankar, and thanks everyone for listening in. It was amazing. Thank you.